What's up, guys? Welcome to Stocks and Coffee with K5 and Fit to Flourish. It is June 23rd, Sunday morning, and stocks are popping. So let's get right into it. So, welcome. We always like to start off with the quote. Today's quote is the quote, Memento Mori. So, Memento Mori basically means it's the Latin for the remembrance of your mortality will free you. Don't sit on the sidelines of life. Get into the game and be the star player. So we are the best team in the world. We have a ton of resources in our Discord, from YouTube stuff to credit, education, real estate, resources, news, plays, watch lists, masterminds, all that good stuff. Just a ton of knowledge, a ton of money being made every single day. So let's get into the week in review. So this week, of course, we had great play calls back to back. So Amazon, AMD, we were crushing plays on the lives, and we had SPY calls as well. We had great live chats on TikTok, so we got our TikToks involved and got some new people involved and got some great plays and got some good feedback on TikTok as well. A lot of the information that we're spreading on TikTok is doing really well for a lot of the viewers. And then we also had great education this week on our Discord on measured moves and being overbought versus oversold, their indications and their implications. Looking back at this week's earnings, we only had one earnings, major earnings type of stock this week, and it was basically CarMax. So CarMax was up 3% on Friday, despite weakness in the broad equities market. After the used car sellers' first quarter profit was stronger than expected, but they still fell. The sales still fell, and they missed estimates. So CarMax is trying to make a comeback, but not quite yet. And that was pretty much the only major earnings this week. In terms of economic data, we had initial jobless claims on Thursday, and it came in at 238K versus 235, which was what was expected. But jobless claims did fall lower than the previous, which was at 243K. So what is that saying? That's saying that we're still kind of not where we want to be in terms of unemployment. We want more unemployment to kind of push away inflation. In terms of related news and buzz, so the market was closed on Wednesday, June 19th for Juneteenth, and Thursday came back around and stocks started to get clapped. And we were ready for this. We were talking about it for quite a while. We do need quite a bit of a retracement. We need that to continue coming in. Stocks got clapped again on Friday, as Friday was OpEx. So we saw a bloody market on Thursday and Friday. Other news, so we had Amazon. Amazon was investing $10 billion or 10 billion euros to expand cloud infrastructure in Germany. They're also creating a monthly subscription service for their AI Alexa. So their Alexa was kind of losing them quite a bit of money, and now they're finding a way to generate profit from it. So this is pretty big for Amazon. Amazon is actually up right now. This week started around 183, currently trading around 189, which is a key resistance area for Amazon. Looks like Amazon may be headed to $200 soon. This AI Alexa service will be huge for Amazon because, again, the name of the game with all of these companies is monthly subscriptions or recurring subscriptions, which is just easy money flowing in every single month. The service is going to have two tiers. It's going to have a $5 tier and a $10 tier. There's not much more information on it yet, but it looks very promising for AI Alexa. Moving on to AMD. So AMD, Wall Street's bets stepped in here because AMD was on the verge of falling off of a cliff. The big bad wolf was blowing that straw house down because AMD was coming down, and it was on its way to the 200 MA on the daily time frame. It was trading around 155, and it hasn't seen those levels for a couple months now, but it bounced up. What happened? We had Wall Street bets saying, hey, let's push AMD to 200. Also, as the broader market was rising, AMD was falling. And now that the broader market is falling, AMD is now rising. AMD was pretty much the only chip play, the only tech play, the chip play that was underbought as everything else was being overbought. So it was one of those sleeper stocks. It's still a sleeper stock as it's still at a good price around 159 and 160. It has room to 200. AMD Also is set to power AI-based smart parking solutions for Sun Singapore, which is Singapore's largest provider of smart parking services. So that was just announced this week on Thursday, along with the Wall Street Bets phenomena. And then in terms of tech. So investors poured a record amount of money into technology funds this week. So it was roughly $8.7 billion flowed into tech funds during the week that ended Wednesday. And then the S&P 500. So the S&P 500 marks the longest streak without a 2% drop since the Great Recession. This is kind of scary. We're on that up and up. We're on a steep incline to the upside. We haven't really had a crazy pullback. We had that little pullback a couple weeks ago, and everyone started to panic. And my thing is now, like, if we really, or when we get a pretty good pullback, the entire market's going to panic, and we're going to see pretty good selling, and it's gonna happen. It's going to cause it to happen when everybody panics. And just be prepared to trade those puts, shorts, however you want to play it. We will be looking for puts. We talked about that cup and handle move to the upside, which is next on our itinerary. Looking ahead, SPY formed that cup and handle on the daily time frame. We hit the 551 level that we were talking about last week, and now we are getting that retracement, much needed retracement, which is a mean reversion. And then K5, I don't know if you wanted to step in, talk a little bit about the markets and what you're seeing as well.
Yeah. So you hit it right on the head, man. That we're super overbought. We talked about this last week, and we'll continue to talk about this until we get a somewhat of a pullback. I mean, right now there's a lot of. We're going into a season of obviously the presidential election. We're going into a season of where I think we talked about this last week. Bad news right now is good news, and we're going to a season where bad news is going to start flipping into actually bad news. So now that our economy is kind of where the Fed wants it to be, we're still on a month-to-month basis. Obviously, we want it to get a little bit slower in order for the Fed to cut rates. So right now, that's what the Fed is looking for on a month-to-month basis. They've talked about that at length. That's what they're looking for. So when we start seeing that flip to now we're getting a little bit more confident in rate cuts, that's when you're going to see bad news becoming bad news again. When if unemployment continues to go up, that's going to be an issue. Obviously the initial claims, if that continues to go up, continuing claims continues to go up, we're going to have a little bit of an issue. Obviously, right now, a lot of people are kind of hurting on the inflation. So right now, as stocks are overbought, you're going to see somewhat of a pullback. You're going to see in the next couple of months, keep an eye on the VIX. The VIX is kind of just like the weight of how things are kind of getting shaky. Like, obviously, we're going to have the presidential election. We're going to have possible rate cuts. We're going to have a lot of things going on, and especially around the world, a lot of elections are going on too. So watch for the VIX to start kind of increasing and going up, and watch as the NASDAQ pulls on back. The one thing I want to watch out for is panic sellers. So Fit obviously talked about this. There's going to be a lot of panic in the market when there's any type of selling pressure that's a little bit more than we think it's going to be. A lot of people start panicking, which is not what you should be doing. You should be preparing for us to pull back into your long positions again when the time is right, when we're starting to consolidate, making higher highs and higher lows, retesting the highs. That's when you need to prepare. So as he said, we're going to see some sort of pullback in the next couple of months, if not some sort of sideways movement for a little while. That's what I'll be looking out for. I can't emphasize this enough. We are super overbought. I mean, there's not much more to say right now. The biggest play right now that me and Fit have been looking at is AMD, because they're lagging behind. They're severely lagging behind. So that's one of the plays we've been looking at going long. All the other stocks in the video, you're going to see some sort of a pullback on those within the next couple of weeks, maybe a month and a half. So that's my analysis on that.
Yes, sir. Yes, sir. Yes, sir. Very good analysis, as usual. And then with that, we do see, again, an inverse relationship with bonds and the market. So bonds are currently at their 200 moving average on the daily time frame. So they're consolidating there. So it looks like they're getting ready to rip. It's getting ready to rip to the upside. So we could see that move to the downside pretty soon on SPY and across the market as well. And then in terms of earnings this week we have Nike. We have some earnings. We have a little bit of earnings this week. We have Nike, we have FedEx, and then we have Micron. And then we also have my alma mater company, Walgreens. So we got Walgreens in there. Walgreens is at its lowest level trading as an equity stocks, the shares. So the lowest level since 2008. So it's at $15 a share. Used to be at 53. I remember I had like I had like hundreds of shares of Walgreens for $53 a share. Now it's at $15. So not looking good for Walgreens. And then in terms of Micron just did a Fibonacci retracement. It's sitting on the 20 MA on the daily time frame, and it has not been below the 20 MA since April of 2024. It looks like it's going to be bouncing back to the upside because it's getting a lot of price target raises across the board from different analysts, anywhere from 160 to 200, and it's currently trading at 139. So I'm looking for a bounce here on Micron. However, the IV is a little bit too high. It's over 100% for the next 4 weeks on the different strikes on options. The expiration dates, all 4 weeks are over 100% for all their options. They're out of the money options, which is what we're looking at. And then the volume's really good though. The volume's over 1,000 on a lot of these contracts, but the IV is just horrible. So if anything, it'll be a good day trade if it does have movement pre-earnings. However, I would not be looking to swing Micron into earnings unless there's a definite move to the upside. And it's just a ton of news on it. I wouldn't swing it. I would definitely play day trades on that. And then for Nike, I haven't really looked into Nike and FedEx recently, but those would be good plays to take a look at as well. And then last but not least, in terms of economic data, we have some Feds speaking on Monday. We have consumer confidence on Tuesday, new home sales Wednesday, initial jobless claims on Thursday, so markets can move. And then core PCE Thursday and Friday. We're going to have some volatile days again, Thursday and Friday. It seems like that's been the story for the past couple weeks, is volatile Thursday and Fridays. Time to make money then.
Yeah, the Fed's on their toes right now. So it's when you see core PCE, when you see consumer confidence, initial claims, pay attention. These are all coming out, and they're speaking volumes on what the outlook is for the rest of the market for the rest of the year. These are key points where the Fed will rely on for their future analysis of whether they're going to cut rates, increase rates, or keep rates the same for a longer period of time.
Yes, sir. And then in terms of the watch list, this week we talked about AMD, of course, and then MU. So Micron is on there. Micron has earnings this week. Very good volume on options. Again, the implied volatility is way too high, so be careful there. You can get crushed there. Amazon is looking good. It's right at that 190 level. It finished very strong in terms of the broader market. It closed very strong on Friday, June 21st. And it could be moving to 200. SPY is getting that retracement at the 550 level. Looks like we're going to be moving down to 543. If we get below 543, we could see 539. If we get below 538, we're cooked. We're cooked. And then Tesla's looking pretty nice. It keeps closing around that pretty similar area there. Where is it at now? Tesla.
Yeah, we on the weekly
183.
time
Yeah, so right.
in the weekly time frame, we closed a little bit above where we initially did. Watch for a possible breakout in the next week or two. I'm watching Tesla super close. We finally got a weekly break above where we were normally closing at. So and it's a green candle. It's a good sign. So I'm watching for buyers to start stepping in here in the next week or two.
Yeah, it actually looks pretty good. Closing way above that range we talked about last week. So good, very good call right there. But yeah, that's all I had for you guys today. Anything else, K5, to close this out?
No, I would just say I would watch for a. I could. I'm not trying to predict the market, but as of right now, with the economic data that's coming out, watch for a possible small pullback to start off the week. And if later on in the week we get better economic data, I could see us kind of making a little bit more of a rally. But ultimately, I would just be watching for those economic reports and never be scared of a pullback. The stock market pulls back all the time. That's the one thing I want to emphasize. Do not be scared of pullbacks. Take advantage of them. Go puts. Go short. Just for a little bit of a time period where we pull back, and then be prepared to buy back into the strength. So that's all I got for everybody today.
You got it. Buy the dip and let it rip. Thank you guys for tuning in to Stocks and Coffee with us today, June 23rd, Sunday. It's a beautiful Sunday morning. It's still super early, as you could tell. But yeah, it's the it's first it's the first team investment team, and we are outie.
Peace.